Okay, good afternoon, everyone. Thank you for joining us today for the webinar on the 2018 BE 140 Benchmark Survey of Insurance Transactions by U.S. insurance companies with foreign persons. My name is Damon Battaglia. I'm an economist here at the Bureau of Economic Analysis. I have with me Andre Garber. Andre, would you like to say a few things about yourself?
Sure, thanks, Damon. I've been working here at the BEA for about 15 years, and I currently am the team leader of the BE 45 Quarterly Insurance Survey and of the BE 140 Benchmark Survey as well.
All right. Andre also wrote and composed the music that you heard before today's session.
And that's not true, Damon.
No. Oh, you know. Okay. Before we get started, I'd like to go ahead and give everyone the lay of the room, the Adobe Connect platform that you see in front of you. Hopefully my pointer starts working. Okay. So to the left side of your screen is the Q&A box. This is where you can type any questions or comments throughout the presentation. We have two staff on hand behind the scenes who answer questions for you, Makia Riley and Alyssa Rhineland. Your questions, when you submit them to us, they will be private, and we will answer them privately unless you specifically request to us that it be made public. However, just as a caveat, at the end of the presentation during the Q&A session, we may select questions from the left in that box to answer aloud. So if you do ask any questions, please be sure not to include any information that can identify your company simply for confidentiality purposes. Okay. Below that box is where you can download copies of the survey, either PDF or Excel format. And I strongly encourage everyone to go ahead and either download and print the form out right now and have it available, or if you happen to have a second monitor, go ahead and pull up a copy of the form on that. We'll be referencing the form and certain page numbers throughout today's presentation. To the right of that box, you'll see contact information for any assistance you may need with the form, phone number and email address there. And then to the right of that box are several web links. First, we have BEA's main landing page for the Bureau of Economic Analysis. On that site, you can find all of the information about BEA as well as all of the products that are available through BEA and all of the estimates that we produce. We produce not only international account estimates, but national, regional, industry account estimates. Below that web link is the main landing page for the BE 140 survey. I am sure everyone's probably been there by now, but if you have not and you haven't taken a good look at it, go ahead and in your spare time go through the page itself. There are a lot of helpful things on it. There is a decision tool which can walk you through the process of identifying what reporting requirements apply to your company. At the bottom of that page are also frequently asked questions that should be fairly helpful to you. They run the gamut, everything from general reporting information all the way down to survey-specific or accounting-related questions. Shortly after today's presentation, we'll be also be posting a recording of today's webinar on that page. Okay, so Andre, unless there's anything you'd like to add?
No, all set.
Okay. All right, so let's go ahead and get started. And let's talk about what we are going to cover today. So in today's session, we are going to review the purpose of and regulations authorizing the BE 140 survey. We're going to outline the types of transactions covered by the survey. We're going to provide an overview of the survey's filing requirements. We're going to highlight the changes to the survey since it was last conducted for calendar year 2013. After that, we're going to go ahead and roll everything together and provide a few reporting examples. And lastly, we'll wrap things up with a brief question and answer period. Okay, so common question that we get, how are these survey data used? These data are used to compile and improve the U.S. economic accounts. Data from the BE 140 survey will be used by BEA to estimate insurance transactions for the U.S. International Transactions Accounts, also known as ITAs, which enter into the National Income and Product Accounts as well as the Input-Output Accounts. We also use these data to support a U.S. government policy on services trade. It's used to analyze the impact on the U.S. economy and on foreign economies. It's to support U.S. commercial policy on trade and insurance services and to conduct trade promotion. To improve the ability of U.S. businesses to identify and evaluate market opportunities. And it's important to remember that the BE140 benchmark survey, along with its counterpart, the quarterly BE45 survey, for those of you who complete that, those are the only source of cross-border insurance services data. So why do you need to complete the survey? Long story short, it is the law, it is required by the law, and it's conducted under the authority of the International Investment and Trade Services Act, as you see here. And that act ensures that your report may only be used for analytical and statistical purposes. The information in your report cannot be presented in a manner which allows it to be individually identified. Your report cannot be used for purposes of taxation, investigation, or regulation. The information in your report is protected from cybersecurity risks through security monitoring of BEA information systems. And your report is exempt from requests under the Freedom of Information Act. More detailed information on the purpose, authority, confidentiality, and penalties for not filing the survey can be found on page 25 in the general instructions. Okay, so let's talk about the covered insurance transactions. Basically, all insurance transactions with foreign persons are covered. I can't think of any that aren't covered on the survey. Andre?
Can't think of any either, Damon.
All right. So you can see them here. There are 8 types. It covers premiums and losses on assumed and ceded reinsurance. It covers premiums and losses on direct insurance sold. Direct insurance is also known as primary insurance. It covers receipts and payments for auxiliary insurance services. The services you see here, they're listed on page 6 of the survey, and they're also, you can find more detailed information about each one on page 28 of the survey. So, who is required to respond? So, first of all, if you received a notification letter from BEA, you are required to provide a response, whether or not you had any transactions with foreign persons related to the survey. We do need to get a response from you. That requirement is necessary to ensure compliance with the reporting requirements and the efficient administration of the survey by eliminating unnecessary follow-up contact. In other words, we need a response from you so that we don't follow up and bug you about getting the survey from you. Okay, so if you were not notified by us, but the U.S. reporter did have transactions with foreign persons that are covered by the survey, you are required to provide a response to us. This is laid out in the Code of Federal Regulations and the Federal Register notice that gave notification that this survey was being conducted, and it is the law. Your response requirements are going to vary based upon your company's specific situation and several factors. So if your company, let's say the named U.S. reporter instead of your company, the named U.S. reporter was not in existence at any point during 2018, you simply need to indicate as much, question 1, page 2 of the survey, and you are done. You can tie it up in a bow and send it back to us per the filing instructions on the cover of the form. If the named U.S. reporter was owned at least 50% by another U.S. entity, you just need to complete questions, and that was for the entire year 2018, you were owned by another U.S. entity. You only need to complete questions 1 and 2, and on question 2, you will indicate who the U.S. parent is. You will provide that contact information to us, and again, you're done. Wrap it up in a bow and send it back to us. Now, if your company was in existence at any point during 2018, or if it was not majority owned by another U.S. entity during 2018, you'll continue to complete the survey for additional filing requirements will be needed from you. Okay, so if the company had no reportable transactions, or if the total covered transactions for any particular type of transaction, i.e. say reinsurance assumed or reinsurance ceded, were below between -$2 million and +$2 million, you're only required to complete pages 1 through 6 of the survey. However, if the U.S. reporter happened to fall in, below that threshold, it was in between -$2 million and $2 million, and wants to provide additional information by completing questions 9 through 13 or schedules A, B, C, or D. We would love to have that information. Every bit of information we get allows us to produce more accurate and timely statistics. If the U.S. reporter's transactions in any given transaction type, one of the 8 listed, exceeded +$2 million or was less than -$2 million during 2018, you are required to complete pages 1 through 8, which runs through question 13 of the survey, and you'll need to complete schedules A through D as specified and as required. Let's talk about the kind of transactions that aren't reportable. So first off, transactions between the U.S. reporter's foreign affiliates and either members of the foreign parent group or other foreign persons is not going to be reportable on the survey. We consider those foreign-to-foreign transactions. If you want to sort of visualize in your head transaction crossing the U.S. border, no transaction crosses the U.S. border in this case. It's foreign to foreign, so it's not reportable. As far as reporting purposes and the consolidation level goes on this form, you're going to report transactions consolidated up to the top U.S. report. It's not going to be a global consolidation and reporting basis. We're only interested in the U.S. entities' activities with foreign persons. You're not going to report any transactions between other U.S. persons, i.e. third parties, U.S. and foreign affiliates of the U.S. reporter. So if you happen to have a foreign affiliate and they're doing business with a third party U.S. that is of no relationship to the U.S. reporter, you're not going to report that either. It's that third party U.S. is going to be reporting that transaction to us. And you're not going to report any transactions between the U.S. reporter's domestic operations and other U.S. persons. To go back to that illustration, there is no cross-border transaction here. Nothing's traveling outside the U.S., if you will. It's a U.S. to U.S. transaction, so it's not covered. Okay, so how do we define these relationships? Note I mentioned things like foreign affiliates or unaffiliated foreign persons or members of the foreign parent group. If you look, and if you'll just bear with me for a second, I'm going to go ahead and pull up the survey here and let everybody take a look. And if you go to page 9 of the survey, I'm going to go to page 9 of the survey. You'll see the definitions and explanations of these reporting relationships. We have a nice illustration there outlining it. I'm not going to go too far into the weeds today of what's presented here because certainly you can read this on your own. But to just give sort of a 30-second summary, a foreign affiliate is going to be a foreign entity that is owned at least 10% directly or indirectly by the U.S. reporter. A U.S. affiliate or U.S. sub is going to be an entity that is owned at least 50% by that U.S. reporter. And a member of your foreign parent group is going to be an entity that is owned at least 10% by the foreign parent if you happen to have one. And we defined having a foreign parent is any U.S. entity that is owned at least 10% by a foreign company. Notice the color coding on this page. This comes into play later in the survey. We have schedules A and B on the form, and there are distinct schedules, I like to call them subschedules for lack of a better word, that are set up for reporting based upon the U.S. reporter's relationship with a foreign person. For example, I'm just going to go ahead and skip to one of them, and the one I pulled up here is Schedule A1. And Schedule A1 is reinsurance transactions with the U.S. reporter's foreign affiliates. Schedule B is set up the same way. Schedule B1 would be primary and auxiliary insurance transactions with foreign affiliates. Schedules A2 and B2 are for transactions with the foreign parent group. And Schedules A3 and B3 are for transactions with unaffiliated foreign persons. I think, Andre, you're going to go ahead and cover that a little bit later in your part of the presentation as well, right?
Yeah, right. You can just put a pin in that for right now, and I'll cover a little bit in my part.
So, Andre, unless there's anything else you want to go ahead and talk about before you get started, I'm going to go ahead and let you get started.
All right. So now we'll discuss the specific changes to the data collected on the 2018 B140 benchmark survey in comparison to the 2013 B140 benchmark survey. The first difference between a 2013 and 2018 B140 deals with questions 12 and 13 on page 8. For these items, we request some additional reporting by line of business for primary insurance transactions. Question 12 asks if you will be reporting primary insurance transactions on the survey. This will be transaction code 5, premiums earned from primary insurance sold, and/or transaction code 6, losses incurred on primary insurance sold, with foreign affiliates, the foreign parent group, or unaffiliated foreign persons on Schedule B. If you respond yes to this question, continue on to question 13. For question 13, we ask you to first indicate the primary line of insurance associated with those transactions by selecting either life insurance, freight insurance, or other primary insurance. If you select other primary insurance, be sure to enter some specific details about the type of insurance in the comment box provided below. Next, provide a percentage breakout of your sales and losses into each insurance category in the table. Again, life insurance, freight insurance, and other primary insurance. Be sure that the sum of these columns totals to 100%. For example, let's say your primary insurance sold was freight insurance, and it makes up 50% of your sales and 30% of your losses. You check freight insurance, and then allocate your percentages of sales and losses as appropriate. Like the 2013 B140, the 2018 B140 also asks you to identify large and frequent transactions. However, the 2018 survey sets this individual transaction threshold at $250 million, either positive or negative, which includes new contracts, transfer of reserves, and catastrophic losses. For question 9 on page 7, you will indicate if your company had any large and frequent transactions. If you respond yes to question 9, you will then need to list the individual transactions in the provided table. Question 11 on page 7 asks if any of your large, infrequent transactions included a transfer of reserves, selection 1, catastrophic losses arising from Hurricane Florence, Michael, or other natural disasters, selection 2, both, selection 3, or none, selection 4. You should also note that large and frequent insurance transactions, which included a transfer of reserves, should also be included in the reinsurance transactions that you report on Schedule A. Complete the appropriate mandatory schedules as indicated based on your response to question 11. The Schedule C of the 2018 BE 140 has been redesigned from the 2013 report. For 2018, as you can see, we have scaled back on the amount of information requested about each of the transactions reported on the schedule. We now ask for 6 items instead of 10. Use the schedule to report the details about your reserve transfer transactions during the year for up to 12 individual transactions. If you have more than 10 reserve transfer transactions, please report information for the largest 10 transactions. The individual items required on the Schedule C, found on pages 19 through 21 for 2018 are the transaction ID from question 10 on page 7, whether the loss was assumed or ceded, the date of the transaction, the country of the foreign transactor, the U.S. reporter's affiliation with the foreign transactor, the expected average maturity of the reserves transferred, the total amount of reserves transferred, reported in thousands of U.S. dollars, as well as any additional information that you may feel is relevant for reporting this transaction. Please note that although we ask you to report reserve transfers on the 2018 BE 140 benchmark reports, please do not report reserve transfers on your BE 45 quarterly reports. Many reporters have included these reserve transfers or initial premiums in the reported premiums on the BE 45 survey. We no longer want you to do that. If you have already included reserve transfers in the BE 45 quarterly reports you filed for the quarters in the 2018 calendar year, you do not need to revise the reports, as we will be able to identify those transactions based on what you report for your 2018 BE 140 benchmark report. However, going forward, please do not include reserve transfers at all. Please do not include them in either the premiums nor the losses you report on your BE 45 quarterly reports. The BE 45 survey instructions are being updated to more clearly convey this reporting requirement.
They have been updated, Andre. We just loaded those into e-file today.
Thanks, Danny.
You're welcome.
BEA has added a new schedule to the 2018 BE 140 called Schedule D. If you reported any large and frequent transactions under question 10 on page 7, as shown here on the screen, you are required to provide additional details on Schedule D if any of those transactions included losses arising from catastrophic events such as hurricanes, wildfires, or earthquakes. Please note that losses from such events should be reported for events both within or outside of the United States, if they were recognized losses incurred and or recovered by the consolidated domestic U.S. reporter. For Schedule D reporting, catastrophic losses can be from reinsurance losses or primary insurance losses. For reporting on Schedule D, the following information is needed. the transaction ID from question 10 on page 7, whether the loss was reinsurance assumed, reinsurance ceded, or primary insurance, the date the catastrophic event occurred. If the event occurred over several days, list the initial claim date. An estimate is acceptable. The U.S. reporter's affiliation with the foreign transactor, the total amount of the loss incurred, reported in thousands of U.S. dollars, the country of the foreign transactor, the catastrophic event associated with the loss. There will be 4 options available to select in both the fillable PDF version of the survey from the website and in BEA's eFile system: Hurricane Florence, Hurricane Michael, the November Wesleyan campfires, or other. If other is chosen, be sure to provide additional detail about the event in the field provided. Now let's take a look at some examples of reporting on the BE 140 schedules A, B, C, and D. As an example, let's say a reporting company had $275 million of loss due to Hurricane Michael and also had $300 million of reserves transferred due to a new reinsurance contract. For this example, we will start with question 10, which is where you would list out each of your large and infrequent transactions. This data is to be reported in thousands. After the table is completed, continue on to question 11. Your response to this question will determine the mandatory schedules that should be completed. After responding to this question, continue to the required schedules on the remainder of the survey. Since there were both a transfer of reserves and catastrophic losses, box 3 is checked, indicating the schedules A, B, C, and D are required. On Schedule A, you will be reporting premiums and losses for reinsurance assumed and ceded. There is a schedule for each type of foreign person as indicated in the banner at the top of each schedule page. Country and transaction details are collected on the schedules for 3 categories of foreign affiliation to the U.S. reporter: A1 for foreign affiliates, A2 for foreign parent group, and A3 for unaffiliated foreign persons. We will show an example that will incorporate the large and frequent transactions we just completed for question 10. For the United Kingdom, there were premiums earned on reinsurance assumed of $320 million and losses incurred on reinsurance assumed of $15 million with a foreign affiliate of the U.S. reporter. $300 million of the $320 million of premiums earned was a transfer of reserves as indicated in question 10. On Schedule B, you will be reporting premiums and losses for primary insurance sold and receipts and payments for auxiliary insurance services. Similar to Schedule A, the schedule is repeated for each type of foreign affiliation. For Schedule B, there were $30 million in premiums and primary insurance premiums earned and $275 million in losses incurred on primary insurance with unaffiliated foreign persons in Honduras. All of the losses were the result of Hurricane Michael, as previously reported in question 10. Since Schedules A and B are now complete, we can move on to reporting additional details on Schedule C. This is where reinsurance reserve transfers, as previously reported in question 10, will be reported. The first item to be filled out is the transaction ID from question 10. In this instance, it is transaction number 2 from the table in question 10. From Schedule A, you can see that the transaction was from reinsurance assumed with foreign affiliates in the United Kingdom. Next, you will fill out the date of the reserve transfer transaction, the expected average maturity reserves, and the reserve amount. Finally, you can provide any additional information relevant to the transaction. The last example covers Schedule D, which is where additional details for any catastrophic loss previously reported in Question 10 will be reported. The first item to be filled out is the transaction ID from Question 10. In this instance, it is transaction number 1 from the table in Question 10. From Schedule B, you can see that the transaction was from primary insurance losses with unaffiliated foreign persons in Honduras. Next, you will fill out the amount of the loss, date of the event, and use the drop-down to select the event. If the event is not listed, select Other, and use the Additional Event Details field to explain the event. You have now completed the required schedules of the survey and can submit the survey to BEA.
Andre, quick question there as far as the country field. Should they be entering the country that's affected by the catastrophic loss, or the country with which the transaction's occurring?
That's a good question, Damon, and they should be reporting the country in which the counterparty is located. And so it is not the location of the loss, but the location of the counterparty to the insurance agreement.
Okay. Thank you.
You bet. At this time, we invite you to ask questions using the chat feature on your screen. The questions will only be seen by BEA staff, but I may select a few questions and answer them publicly. We'll try our very best to address every question here in the webinar, but if we are unable to get to your question, we ask that you reach out to us using one of the contact methods that we will provide.
Andre, if I can just add something before we start answering questions. There's
Sure.
something I forgot to cover at the beginning. If you look down the web links box that you see there, I think I forgot to mention the third link, which is our e-file address if you'd like to file the form paperlessly, also electronically. If you want to do that, go there. Do not, the fillable PDF that you have in the documents pod in the lower left-hand corner. It's not the one you want to use if you want to e-file the form. You're only using that one if you want to fill it out and download it and print it out and send it back to us via mail or private delivery. Again, use the e-file link to file electronically. I'm only saying this because sometimes folks attempt to fill the PDF form out and then go to the e-file website and expect to be able to upload that PDF into e-file, and then they find out that they can't, and everybody gets very sad because of it. So we don't want that to happen. We don't want you to be sad or frustrated. And another thing that I forgot to mention is extension requests. If your company needs a filing extension, you could submit that extension request to us in writing, and the contact information for that is on page 29 of the survey. You can either fax it to us at 301-278-9506 or email to be140extension@bea.gov. Again, you can find that information on page 29 of the survey. We just need to receive that extension request from you prior to the survey due date. That's all I got.
Yeah, thanks, Damon. Oh, here's a question. The question is asking, how often is the survey conducted? That's actually a very common question that we receive. And the answer is that it happens once every 5 years. It's a benchmark survey. And in between, we have our quarterly BE45 survey for those reporters that meet the requirements to file on a quarterly basis. There, the threshold for filing is a bit higher. It's $8 million as opposed to the $2 million that we have on the benchmark survey. Another question, should we use the cash or the accrual basis? We ask that you use the accrual basis when reporting your transactions on the BE 140. Should all catastrophic losses be reported on Schedule D? Well, this depends. So if you have catastrophic losses, you will report them on Schedule D if they meet the threshold for a large infrequent transaction, which is $250 million. So you do not need to report all the losses that you consider catastrophic. Only those that meet the $250 million threshold will be reported on Schedule D separately. The other losses will be included in your regular reporting on Schedules A or B. How do you report transactions with unaffiliated people in the U.S. Virgin Islands? Well, for our purposes, we consider the U.S. Virgin Islands to be U.S. persons. So if your U.S. reporter has transactions, insurance transactions with people in the U.S. Virgin Islands, we want you to exclude those from the survey because we consider those to be domestic transactions.
I'll just add that that goes for all the U.S. territories, such as Puerto Rico, U.S. Virgin Islands, the Marshall Islands. Can you guys think of any more? American Samoa. That's all I got. You get the idea. U.S. territories are not treated as foreign persons for the purposes of the survey.
And if you filed the BE 45 reports and you filed them on a consolidated basis, we do want you to file on a consolidated basis for the BE 140 as well.
And a similar question is we get, it's not here, but we do get quite often, folks will say, hey, I filled out the BE 45, why do I have to fill out the BE 140? You know, I already filled out my BE 45s for 2018. Well, again, it's required by law. That's the short answer to that. But as you can see throughout Andre's portion of the presentation, we're collecting a lot more information on this BE 140 than we collected on the BE 45. So while there is going to be a great deal of overlap between the two surveys as far as Schedules A and B go, Schedules C and D are not on the BE 45 survey. In addition to that, filing this benchmark survey for the entire calendar year gives you a chance to provide any adjustments to the transactions. Maybe you need to revise some of the statistics. So this is a great time to do that. This helps us give a broader baseline for our estimates and, again, to get those more timely and accurate estimates down for the next time we publish the 2018 data, which hopefully is next year.
Yeah, and one more thing that I'll add is that losses in general should be reported as positive amounts for the BE 140 and also for the BE 45. Sometimes we get losses mistakenly reported as negative amounts for accounting conventions, but we do want, for our purposes, to report losses assumed or recovered as positive amounts and also losses on primary insurance as positive amounts. There is a rare exception where if you go through and you calculate how to report the loss based on instructions on page 28, in some rare cases that amount will come out as a negative value based on following our instructions, and that's fine. But most of the time, just typical losses will be reported to us as positive amounts. Okay, well, Damon, do you have any other remarks?
No. Again, I'd just like to thank everybody for coming out and, virtually coming out and spending some time out of your day to listen to us. Hopefully this is very helpful to you. We certainly really enjoy giving these presentations, and we hope that they help a lot of people to complete the survey. Again, if you have any additional questions, we're going to stay online and answer some of the written questions there for a while. So continue to peck away there and type them into the Q&A box. But if you think of something or encounter something after the fact, later on tomorrow or, around September 29th or 30th, you can go ahead and give us a call, 301-278-9303, or you can send an email to be140help@bea.gov. As we show below there in the notes section. I guess one more huge thing to hit there, Andre. When is the survey due?
September 30th, Damon.
September 30th. Remember, there are only 30 days in September, not 31. So, make sure you get it in by then. Okay, that's all I got.
Thanks so much.
All right. Take care, everyone.